Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about ETFs that invest in the Swiss stock market. So this is part 1 and it will be the ETFs that invest in the SMI. So in total I found 12 ETFs that invest in stocks that are noted on the SIX stock exchange. 11 of those are on the SIX stock exchange, of which 9 exclusively. And one of those ETFs that I found is only noted on the German stock exchanges, and that one is DBXS. That's the name for the Xetra stock exchange. But I'm not going to talk about that ETF today, because today it's 3 ETFs that invest in the SMI. And the SMI is the Swiss market index. I already mentioned it in a previous video. And as you know, the main thing about that index is that it's invested in the 20 largest companies on the SIX stock exchange. So the company numbers from 1 up to 20. And if you want to know them, these are all the 20 companies that are in the SMI index. And of course, when it comes to dividends, you have Novartis, you have Nestlé, you have Givaudan, you have ABB, Roche is also a really big one. So most of the time, Roche, Novartis, Nestlé, and ABB will make out the top 5 of the companies in these ETFs. So know that when you want to invest in these ETFs, of course. So the first one, it's the SMICHA from UBS. It has a low total expense rate of 0.20%, and it notes in Swiss francs. So all the ETFs that I mentioned in this video are going to be in Swiss francs, and also the dividends will be distributed in the form of Swiss francs. So that's easy to explain all the time, so I'm not going to repeat it all the time. I'm just going to say the current, in fact not the current, because it's the course from Monday during the day when I made these PowerPoints. So it was yesterday on the 18th of December. It was 113.72 Swiss francs, and so it invests in the 20 stocks, and in total there is 2.25 billion invested in this ETF, so not bad at all. It's a fully replicated type, and as you remember, fully replicated means that it replicates the index in full, so they don't they don't make small changes all the time. When money comes in, they replicate the index for 100%. And the performance since 2003, and this one is 248%, because of course they started a bit after the biggest dip of the .com crash from 2001 was behind it. The period was behind, so it profited optimally from the recovery thereafter. So more importantly is always to look at the 5-year and the 3-year period. And the 5-year it's 45.95% up, and for the 3-year period it's up 15.16%. And then of course for this channel the most important thing are the dividends, and this will often be the case in this series, in the different parts of this series. So when you see a number like here 4, and then in parentheses you see 5, that means that there are 5 dividends being paid out, but in fact the fifth one and the fourth one are on the same day in July or in September. So that's important to know. So in total there are 5 dividends in March, April and September, but in September the dividends that they gave, 0.22 and 1.18, they were distributed on the same day. So that's important that you know that. But in total, this gave a dividend yield of 2.93%. Of course, dividend yield, it's always with the past dividends and calculated on the current the current cost of the ETF. So it will not always be correct. So for the coming year, it can be a bit higher, it can be a bit lower, and it's also to see when you buy an ETF, of course, how high your dividend yield on cost, that's then the better measure to use, will be for you. But right now, I took the same for all the ETFs that I'm going to discuss in this series. So it's 2.93% for the UBS ETF that invest in the SMI index. And then we have the SMI index fund from iShares with the total expense ratio of 0.35%, so higher than UBS. And momentarily the cost is 115.78 Swiss francs, and it invests its money in the same 20 stocks, of course, because it follows the same ETF strategy and the same index. There is a little bit less money invested in this ETF with a little bit over 2 billion. Also fully replicated type. And here you see the effect of the crash of 2000-2001, where you have a much lower yield performance over the past 24 years. So that's important that you more or less know when the crashes happen on the stock market. So 2008, 2009, and then 2020, there was also a crash. So every time, shortly before the crash, the when the ETF started, shortly before the crash, the performance will always be less than an ETF that started shortly behind the crash was over. So here again, 5 years, the performance is 45.51%, so not that big of a difference over that period. 3-year period, the same, 15.29. And then for the dividends, they give 9 dividends in a year, and that's in March, April, July, and September. And the dividend yield is a bit lower for this ETF with 2.71%. And then we have the SMI ETF from Xtrackers. So the name here is Swiss Large Cap, but it invests in the SMI index. It's a Luxembourg-based one, and the total expense ratio is a bit lower than the one from iShares, but more expensive than the UBS one. And momentarily it costs 114.70 Swiss francs, and it's invested right now in 21 holdings. So maybe that's why they name it Swiss Large Cap, but it's the first 20 are just the same as the SMI. So I yeah, it's in the name as well, XSMI, but still they have one holding more. I think that it's Roche I or one that they hold more above the other form of Roche GS stock. So that's why maybe they name it 21, because they have 2 times Roche in it. But I didn't check the complete list for this ETF. And there's a little bit less than 1.25 billion invested in it. Also fully replicated, and 5-year period and 3-year period it performed way less than the other two. So also 1 year it's not that great, and also the dividends, they only give one dividend in a year, and it's in August, and the dividend yield is also much lower than for the other two ETFs. So I don't know what is going on with this ETF, but yeah, I think they keep more for themselves from the dividends that they receive, so that they don't need to sell stocks or something, because yeah, it's quite obvious that this is quite worse than the other two ETFs. And this is then the overview for these three ETFs that I mentioned today. So you have SMI CHA with 45.95 and the CSSMI with 45.51%. So it's almost the same, and the dividend yield, okay, it's a bit lower, but you can choose either one. But if you have to choose one, I would go for the cheaper one from UBS. So as you know, it's not financial advice that I give, it's just my personal opinion. But when I look at these numbers, when you want to invest in the SMI index, the ETF from UBS is just the better one out of the three that I presented today here. And the one from Xtrackers, XSMI, I don't know what happened there, but it's performing way less. So the openings here are openings for the other ETFs that I'm still going to discuss in the next parts of this series. So thank you for your attention, and please subscribe if you aren't already subscribed, but I only have 7 subscribers, so it's most likely that when you watch this video that you aren't subscribed yet. Hit that like button and see you on the next video. Bye.